All right. Hello, everyone here on Zoom. It looks like Facebook is coming up, so I will just be with you in just a moment and we can start the conversation. So just bear with me. All right. So thank you very much again for being patient and joining us here at Wealth Conversations with Gaitha. I just want to welcome you from wherever you are, be it here or around the world. Thank you for joining in, and I really do appreciate that. So for those of you who don't know me, my name is Gaitha. I am the founder and the CEO of a company called Regal Africa. What we do is we help our clients create wealth. And with that, what I'm planning to do with this wealth conversations with Gaitha is just have that discussion around wealth, especially now because of COVID-19. I've been getting very many questions from different people saying, what do we do during this crisis? What are the best steps and what should we do going forward? And so I thought this is a great opportunity to take advantage of technology to be able to reach people from anywhere in the world. So whether they've logged in on Zoom or on Facebook Live, you'll be able to ask the right questions, and I will definitely be able to assist you. And so the reason I started this show is really to help people and answer these questions, and we'll be here weekly at 6 p.m. East African time, or even the United States, we are live at 8 a.m. Pacific Standard Time. And like I said, this is all about supporting people from wherever they are in the world. We will be able to have this discussion, and I could be able to answer your questions, because you never know. The question that you ask is definitely a question that somebody has, but they just don't know how to go ahead and ask that. So I'll just go ahead and recap what we discussed the last conversation, which was episode one, which is the one that we launched. In that episode, we were talking about what is the formula for success. What is the formula for creating wealth? Because there's a secret formula that the wealthy use that a lot of us don't know. And it's really just a 3-step process. And I'll just repeat it before I go on to the discussion for today. So when you're looking to start creating wealth so that you can ensure that you have wealth for generations to come, the first thing you need to have is have a wealthy mindset. You really need to think abundance. You really have to transform your mind from lack to abundance. From there's not enough to say there's enough, all of us. In this season of crisis with COVID, everyone is wondering, oh, everything is bad. I don't know what to do. Everything is shutting down. But the wealthy are actually looking at this opportunity and saying, what do people want? What is the good and service that I can provide that people will be able to pay for? So that is the first step, is why having a wealthy mindset. The second step was around having a plan in place. You need to have a vision around what is it that you want to create and how you want to be wealthy. So then you can be able to take the right steps. And then the third thing was actually wealth accumulation. Wealth accumulation just basically means you already have a strategy in place and you're going to go ahead and take the steps. So if you remember anything from last time, remember it's mindset, it's planning, it's accumulation. So now today, really, from the feedback that I got the last time, a lot of people were actually saying, okay, yes, you said that we need to have a wealthy mindset. How do I go ahead and do that? And should I just be focusing on money, or should I be looking at lifestyle? So for me, I thought that today the discussion we'll be having in regards to creating and managing wealth, you really need to think holistically. And when I talk about holistically, I'm looking at your life in general. And so when you're looking at your life in general, there are a couple of things that you need to look at, and what we call map your life. So what map your life is really M.A.P.E. I like acronyms so that I can remember things, and I hope you remember that. So what M.A.P.E. means is, one, Maisha. So Maisha means you need to have a life plan. You need to actually have a plan for your life totally and say, this is the vision I want to be, and then go ahead and put in the steps that you need to actually have the lifestyle that you want, live the best life that you can have. The second thing with M.A.P.E., formula is really Afya. Afya just means health, right? So you need to have a health plan, especially right now because of COVID. You really need to be taking care of your physical health. Just make sure you stay home, stay safe, right? And the other thing you need to be looking at is really your mental health. You also need to be looking at your emotional health, your spiritual health. And the reason I'm saying all these things is they all relate to wealth, right? Healthy you, wealthy you. If you are stressed, if you're not healthy physically, emotionally, spiritually, financially also, then you will not be able to start accumulating, creating, or managing your wealth. So you really need to look at your health. The third thing with your map your life formula is actually P. And P is where I really focus on. I really talk to people about how to create wealth. And I'm talking about money in this case, right? So how do you make money? How do you make money during and after a crisis? And I'll be talking more around that. And I hope we'll have more discussions around that. So P is for Pesa. Pesa is money in Swahili. So when you're looking again about map your life, you're really looking at your life plan, which is you're looking at Afya, which is your health plan, Pesa, which is your Pesa plan. And then the last thing is actually E, which is Elimu in regards to knowledge. For you to actually become wealthy, you need to be knowledgeable. You need to understand what is the system. There's a system in everything, right? So if you want to create wealth, there is a formula. If you want to know how to do something, there is a system. The system and the way to create wealth in depends on culture, right? So the Kenyan culture has a different way of creating, accumulating, and transferring wealth than, say, the American culture or the European culture or the Asian culture. They have similarities, but there are certain things that you cannot do, for example, in Africa, that is okay to do in Europe. So wherever you are, you actually have to be very educated and understand and look at the people who created wealth in that location that you are in, and then say, okay, what have they done and what can I learn from them? So remember, when you are looking to create wealth and manage your wealth holistically, you need to look at your life, your health, your money, and your knowledge. And if you do those four things, then that's going to be the recipe for success. So because for me, I'm a former banker, I'm a wealth expert. I really specialize in wealth management, investment banking, trade. I'm all about how to create money. So I'll spend some time today just talking about that. But before I even go into answering questions, one of the things that I got from the last time, a lot of people were saying, we're getting all this knowledge and other people, and it just seems like everybody thinks it's so easy. I just need to think wealthy and I become wealthy. And I always tell people it's not about that. It starts with the mindset, but it will not actualize unless you actually go ahead and put a plan in place, but you have to execute. So what you need to do is, again, make sure you have a wealthy mindset, make sure you have an advisor, a wealth advisor who can walk you through that journey of wealth creation. You then need to actually put the plan in place, and then now you can execute. If you do not execute and all you're doing is dreaming about having a house in the suburbs, or you're thinking you're going to have a private jet, or whatever wealth is to you, it will not happen until you take action. So that's what I really want to go ahead and start off with today. So before I go in, we do have a few questions that were already requested, but I see a few people here on Zoom. We do have a chat, so if you have any questions, go ahead and just write them on the chat, and I'll go ahead and answer that for you. I'll also be checking my Facebook to see if we have any questions on Facebook before I answer the questions that was sent, okay? All right, so just a moment. I see a few people streaming in. I see Kingwa Kamenchu. All right. She has about 3 questions, and I'll get that to her. Okay. I see, okay. Haroga Kwegi is watching from the US. Thank you for joining in. I see Diana from Los Angeles. Thank you for joining in. Wow, it looks like we're global. I see Joe Degwa. He's connecting from Nairobi. Welcome to the call. Oh, Nyambura from Seattle. Thank you for coming in. Adeolu. Oh wow. Today it looks like we are getting people, different people that I know. Thank you for joining in, and I'll be sure to answer your question. So I'll go ahead and just start off with Kingwa Kamenchu. She's asking, one, oh, so sorry, she was just repeating what I say. Have a wealthy mindset, have a plan, and take the steps to accumulate. That is correct. It's just a 3-step process. And if you do that, you are on your way to creating wealth. All right. The next question that I have here is, just give me a moment here. All right. I'm still waiting for your comments so that I can answer. Well, I get questions going in. So the first question that I have here is someone says, I am in debt. I have a SACCO loan, bank loan, and other smaller loans. How can I pay for them and start investing? Okay, so the person says they're in debt, but they want to start investing. What do they do? I always say that you want to balance everything out. When you're looking to create wealth and you're looking to invest, you have to look at, first of all, reducing your liabilities, which I mentioned last time is basically your debt. So you need to reduce your debt because you also want to look and say, look, if I am paying, for example, if you're in Kenya, you're paying debt of, double digits, 22%, and yet you're investing and getting 10% in return. It doesn't make sense for you to do that. So what you want to do is pay off those debts, right? Especially the unsecured debts who have really high interest rates. You want to pay down your debt and only keep the debts that are what we consider good debts, right? So a good debt is something that you're actually borrowed to acquire an asset that will appreciate in value. Say, for example, you get a mortgage to buy a house with anticipation that that house will increase in value. That's a good debt. But if you go ahead and actually borrow from your SACCO or from the bank, and then you use that money to go ahead for a vacation or to go on a shopping spree, that's not good debt. So when you're looking at how to manage your debt, you want to first of all pay off the high interest paying debt, but you want to make sure that you only have good debt. So like I mentioned, debt for a mortgage, maybe you've borrowed to put money into your business, to expand your business. That would be it. Sometimes if you want to, let's say, for example, you need a car to do your job, then some of these things are good debt. So in that particular situation, because I don't have a lot of information, I would first of all say, you want to pay off the bad debt, keep the good debt and just pay the monthly payment, and then you want to start investing. But even before you start investing, you actually need to have a savings plan. You need to have, especially now because of Corona, you actually have to have an emergency fund where you put at least 3 to 6 months of your monthly expenses, because you do not want to start investing into long-term assets, start investing for the long term, and yet you do not have money that would cushion you in case something happens. We don't know when COVID would end. We don't know if, in your situation, I don't know if you're working or not, so you don't know if you will be laid off. We don't know if your business will be doing well or not. So what you want to do is pay down the debt, have an emergency fund, and then start investing. So it is a process. And if you want more details about how to do that, you can always contact Regal Africa, and our wealth advisor will assist you with that. So I hope I answered that question, but the key here is pay down that debt. Pay down that debt. All right. So then the second question we have here is, we see a lot of fraud in real estate development where people do not get the houses they paid for. Is it better to buy land and develop it yourself? I think this is similar from the last time. So yes, in Kenya specifically, where I am right now, the last couple of weeks, there's been cases of fraud happening where um, I don't know if it's fraud, and so don't quote me, but the thing is that developers who had promised that certain developments would be finished within a certain time have not completed them, and so their developments are stalled. And so the investors who actually put money into those developments are actually saying that, you know what, I put in my money, you have not met my expectations, what should I do? And so the conversation about, do you buy land and develop it yourself, or do you actually buy property with a developer? This is where I say you need to do due diligence. Before you start investing, before you work with anybody, you have to do due diligence. You have to actually look at, in this case, a developer. Do they have a track record, right? So if they have had a track record where they have actually developed property and they have actually completed the development on time, good quality, and everything, then that would be someone that I can say, you know what, you want to look into it and you can actually, invest in that particular development. Why? Because it actually sometimes, and if you look at it from a wealth perspective, you're so busy working, you're so busy doing business, you probably don't have time to just sit down, buy land, and develop your property, right? It depends on your particular situation. But most of the time, a lot of people don't have the time. And because they don't have the time, it might make sense to actually acquire property that has already been developed. But I would say, do your due diligence, look at these developers, see if they are actually have a good track record, and that is the only time I would recommend someone to actually go with a real estate developer who is in the process of um, developing real estate. All right, right. So we're going. I still see some more questions coming in. I see. Oh, I see Modoni is watching. Thank you, Modoni. Elizabeth Taylor. Oh wow. All right. So we're seeing more people coming in and joining in, and I'll continue answering any questions that you have. And please write your questions down so that I can answer them. All right. So the third question I have here is someone asks, how does someone ensure they earn a constant salary from their business aside from the business profit? How does someone ensure they earn a constant salary from their business aside from the business profit? Okay. So last episode, I was talking about the way you want to make sure that you're creating wealth sustainably is to ensure that you always have income coming in. And that means you need to diversify. You need to have multiple streams of income. And so that's where we talked about the SBI formula, which means you always need to have a salary, you need to have business profits, and then you want to have investment income. Again, salary, business profits, and investment income. And I've learned this because one of the things about life is you never know. And you always have to make sure that if one thing is not working, you actually have an alternative way of getting income. All of us have bills to pay. All of us have responsibilities. And because we never know what will happen in the future, especially right now with COVID-19, you cannot expect that your business will always make the money that you need in order for you to be able to get the money that you can use to actually go and invest. So the first thing about salary, which I think the person is asking, the person has a business, so how can they ensure they have a constant salary? I always say, unless you're self-employed, unless you're a consultant, unless you and you don't have employees, you always want to have a salary. So if you're part of management, what you want to do is to say, if I was working for somebody else as a general manager, as a managing director, or whatever role that you're playing in your business, if I was to do that role, how much would I be paid? And then also figure, because depending on your business, whether it's a startup or already established, you want to set aside that amount monthly to ensure that that is your salary, right? So every month I have this salary that will enable me to pay whatever bills and expenses that I have. And then that will ensure that you're not digging into your business profits, right? Because when you're creating wealth and you're accumulating wealth, what you want to do is any business profits that you make, you want to reinvest them into your business, or you want to take that extra money and put it in other investment to diversify from your business. Because right now your business might not be doing well. There are so many people who are not in their businesses, are in luxury businesses that are not in non-essential services, people who are, for example, in hospitality, people who are in just basically businesses that right now people are saying, you know what, I don't need to spend money on this kind of good or service. They're having a very hard time. So if somebody had actually put all their money into their business and had not taken money out and invested in other investments, then they would be having a really hard time currently. So you want to diversify, but the first thing before you do that is you want to make sure that you have a standard amount that you actually are collecting from your business so that you're not dipping into your business. And that salary will depend, again, like I said, on what the going rate is in the market. And it will also depend on also what your business can afford, right? Because, for example, if you're a managing director at Safaricom, how much you get paid is very different than if you're a startup business. So you have to take this into consideration. Right, so I hope I answered that, but remember, always have a salary, and the business profits that you make sure that you're reinvesting into your business, or you're taking that business profit and investing in other asset classes or other businesses so that you're diversifying your income stream. All right, then we have a fourth question here that is saying, I am looking to retire soon. What can I do to prepare for retirement? Retirement. We're all gonna retire one day, right? We're all gonna get old. So, and you know what? You also don't need to be old to retire. You know, for me, my vision was always to retire at 36, 35 actually. 35. I was like, at 35, I want to be in a place whereby I'm not working, I'm financially free, and I can get to do whatever I want to do for the rest of my life. So you don't have to wait until you're 60 to retire. What you need to do is just make sure that you know when you want to retire and actually do the steps that you need to have to make sure you're financially free so that you can retire and not have to go back to work. So in this case, the person saying, what do I have to do to prepare for retirement? When you're looking at retirement, you want to make sure that the money you've accumulated while working is enough to sustain you for the rest of, I would say, your life, expected life, right? And not have to worry, right? You won't need to depend on other people. You will just have to depend on whatever you've been investing. Now, there are different ways for retirement, depending on where you are. So if you're in Kenya, most people build apartments because they rely on rental income for retirement. Starting out, people start off putting money in a pension, whether it's your company pension, or if your company doesn't have a pension, then you would put, I recommend people to put aside money into their own personal pension because there are actually tax benefits of doing that. In Kenya, if you get tax deduction of 20,000 a month into your pension, which is about 240,000. When you're doing your taxes, you can it will reduce your taxable income. So I do encourage people to put money into a pension plan. If you're in the US, if you're working, then people have their 401k. If they're in employment, they have their different IRAs. So you have to actually also understand how you're creating wealth before you retire. If you actually have a salary, you're employed, then what happens is you always have to put money aside every month. Every month you need to be putting money aside towards retirement. Normally it's recommended at least 10% minimum, right? But of course, if you don't have a lot of expenses, you can do more than that, right? So every month you want to put that money into something that is actually going to be growing in value, so that by the time you retire, you already have a chunk of money that you can retire on. So like I said, so pension is one thing, real estate is another. Some people also invest in a business through a side hustle, so that when they retire, their business has already grown and they're already able to hire people. So then they will be just living off their business profit. So there are various strategies that you can take to ensure that you have different revenue streams that they are coming in um, um, when you retire. What I've noticed that happens in Kenya is that when someone retires, they take their money and start a business. And then they become a startup, which means they are starting when they are older, and they're probably not too familiar with that kind of business. So they tend to lose that money at that time, or they are not able to live up with the times. Like right now, technology is a big thing. So they're not able to, compete with younger people. So what I would say, if you're planning for retirement, just really understand what the amount of money you want at that time, and then do these different things. Pension, so you do it monthly, different asset classes, just to make sure that by the time you're retiring, you have a chunk of money that then now you can be able to live off that. And when you retire, there are different things that you can actually put your money, so that you get a periodic amount of money going into your bank account. In insurance, there are things called annuities. With pension plans, you can actually put that money into what is called a drawdown account. So let's say, for example, you have accumulated 100 million or 10 million shillings during your working years. You can actually take that amount of money, say 10 million shillings, and put it in a drawdown pension. And then you would say, give me some of that money for the next 10 years, or I only want to live off the interest. So while you're planning for retirement, just remember you're accumulating that, but at retirement, you need to be able to know how you'll be able to draw down that money. You do not want to get that chunk of pension and spend it all at once. All right. So I see here Joe Degwa, all right? He's asking, what are the risks of getting into a financing arrangement to start an import business investment at this time with all the uncertainties caused by COVID-19 crisis? What are the risks of getting to a financing agreement? It depends. What kind of financing arrangement? Are you looking to get debt? Are you looking for an equity investor? So those things depend, because, for example, if you're looking to start into the import business, and right now we have travel restrictions, even though things are opening up, right? There is still some restrictions going on. I think it will be very hard for someone to give you money right now without you showing or being very clear that you will be able to pay them back. So I think right now, if you're looking to start a business and you want to borrow, it will be very hard for you to do that because of the risks involved. But if you're looking to get equity in your business, say, for example, because it's a startup, you're looking for an angel investor. An angel investor is someone who has a chunk of money. They look for really good ideas, and then they will support you. So in this case, if an angel investor puts money into your startup and they're looking at for you to start an import business, then now you have to actually show them what is the opportunity that you're seeing that will happen after COVID, right? And I'll just give you a little thing, a few tips here, because I'm very passionate about international trade, but even more passionate about intra-Africa trade. The opportunity that we are going to see is intra-Africa trade. So if you're going to be able to show, in this case, because it's an import business, if you're going to be able to show, you know what, if I'm able to import these goods into Kenya, and then I'll be able to export them into the rest of the continent because of the Africa Continental Free Trade Agreement that is in place. If you're able to show that, and the projections show that you will be able to get a good return of your money, then an equity investor will be able to invest in you. But if you're just looking for debt, I think it's very risky, because there's no guarantee that you'll be able to make the money that you will be able to then now use to pay off that debt. All right. Right, but that's a good question. But opportunities are coming just right now. It's more, I think, this is a time when you're really looking to strategize. You're looking at the opportunities for the future. So you need to be sitting down and say, what are the opportunities that I am seeing? And then that's what you take advantage of. And I think because one of the things I'm really big on is really working with other people, collaboration, right? You can start business by yourself, but it will be a lot harder than if you actually join, but with the right people. Sometimes we go into partnerships with the wrong people and it messes up the business. So you want to make sure that you're in collaboration with the right partners who will support you in the business idea that you're doing. Right? So I wish you well, Joe, in your business that you're planning to do. All right. So we'll continue going on with questions. We're still live on Facebook. I still see people joining in. So please ask the questions that you have so that I can be able to answer that. And yeah, and also for those people who are on Zoom, please go ahead and ask your questions. They're on the chat room. At your top right, you will see chat. Please just type in your questions and I'll be glad to answer that. All right. So the next question we have here, someone says, what are the best investments to get the highest returns? What are the best investments to get the highest returns? Oh, I think I need to drink. Sip on hot water. That's a question everybody asks. When people are starting on their wealth journey, everybody says, what is the best investment? How can I get the highest return? That is a very interesting question because there's no clear answer because it depends. When you're looking to invest, there are three things you want to look at. One, you want to look at your risk tolerance, right? So if you're looking at the highest returns, are you willing to take the risk, right? So if you're not willing to take the risk and you're looking for high return, then that won't happen. The second thing would be, what is the amount of money that you want to put in, right? So if you're looking to invest $1 million shillings, which is $10,000, versus someone who wants to invest $1 million, the kind of investments that you can get in are different, right? So the smaller amount of money that you have, the more restrictions that you have into the opportunities of the asset universe, if I may put it, right? But the more money you have, the more opportunities that there are in, especially in alternative investments. So for me to answer this question, it's a bit hard because I don't know your particular situation, but you always want to look at your risk tolerance, amount of money that you're looking to invest, and also your time horizon. If, say, somebody wants to invest short term versus long term, right? But I have to say something. It was quite interesting. I was listening to the CEO of M.A.P.E Capital, which is one of the fund managers we work with. And they just did the numbers and analysis because of what's happened with COVID. I personally believe more in investing than in trading, but the opportunities in trading. So he was actually talking about when the crisis happened in March, early March, a lot of people were selling the Nairobi Securities Exchange. So of course the prices were going down and people were just thinking doomsday, doomsday. But there are some people in March who actually bought some certain equities, certain stocks in the Nairobi Securities Exchange. And within that time period, between then and, in a couple of weeks, the prices had gone up 20%, right? So you've got a 20% in like a month. So that's really good return. But it's also very risky because if you're putting money in the equity market, you do not know this volatility, right? So you can go up 20%, go down 50%, volatility. So if you're looking to, and you have the risk appetite, you can look at things like equities. You can look at, right now there's so much going on and nobody knows what's happening in the US with the dollar. So people are actually seeing the dollar weakening. So, there's opportunity probably in the Forex market. There's a lot going on in cryptocurrency. Those are things you want to look at. Also, some people are more conservative, and especially women. Women are conservative. I've also noticed people in Kenya are quite conservative. They don't want to lose money. So most people are saying, you know what, at this time, I do not want to put my money in something so risky. So I'll put it in, something conservative. So they're only making possibly around 9, 10, 11, 12% per annum. All right. So if you want to get high returns, you have to be willing to take the risk. And the best thing is to actually sit down with a financial advisor, because a financial advisor will be able to look at your particular situation and then look at what's going on in the market. Like I said, there are different companies we work with, and they generate different reports. So once we understand your situation, or a financial advisor understands your situation, they will look at everything that's going on and be able to advise you. This is where I think you should put your money, depending on your amount, your risk tolerance, and your time horizon. But I cannot tell you this is the best investment to get into. We are in a new normal. We don't know if the old way of investing is going to continue, because there are certain things like, I think, and I mentioned it before, there are certain things like real estate where everybody thought like that's a going, it will always be appreciating. But we are seeing with the crisis that we are going to see a correction. There'll either be stability in the real estate market in Kenya, or the prices will go down and people will get really good deals in distressed real estate properties. So speak to an advisor and they'll advise you accordingly. All right. This is, I think, the last question, but I would encourage you, I see a couple of people on Zoom. If you could just type in your question, I'll be glad to answer. Unless you want to ask the question yourself, you can unmute yourself, or I can unmute you and you can ask the question yourself. But let me know what questions you have and we'll continue this conversation. When I was starting this whole Facebook Live, Zoom Live, what I really wanted to do is answer people's questions. So that's why I'm here, to answer your questions. So Kingwa Kamechu is asking, what is the criteria for choosing the right business partner? What is the criteria of choosing the right business partner? That's a good question. Wow. Because when I started my business, I had a business partner and it didn't work out. But it was many lessons learned. For me, what I say when you're choosing a business partner, it's like choosing your husband or wife, right? The person, it's a very important decision, right? Because this is a person who you're going to spend a lot of time, a lot of resources going to achieve what it is. So you have to, first of all, when you're choosing a business partner, you have to make sure that they have the same vision as you, right? So if they don't have the same vision for the business as you, there's going to be a challenge. So if the person is not in agreement with you, please don't be in business. Don't be a business partner with that person, right? So vision is very important. You're going in the same direction. The other thing, the person has to be just as invested as you, right? So for example, if you're the one who is very passionate and you know your characteristic is whereby you give it your all, and yet your business partner is laid back, they don't spend too much time on the business like you do, and yet maybe your agreement would be 50-50, that's not the right business partner for you. So you want to make sure that the person that you get into business with, get into bed with in business, right? That person has to have the same work ethic, has to have the same values as you. The person has to want success as much as you want that success. Because if you're not in alignment with that person, then you are not going to have a successful business. Because you'll find that you're probably doing a lot more than they are. And so then there will be resentment, there will be different things going on. So make sure you have same vision, you're in alignment, you're both investing the same thing. The third thing, though, I think that you need when you're choosing a business partner, I think you need to find someone who complements you, right? So there are some people who are more technical, other people are more visionary, other people are more back office, other people are more front facing. So you have to look at a business partner who complements you, right? Because you don't want to have a business partner who's just like you. So you want to look at the business, look at it. What is it that we need in this business? Find someone who has the strengths that you don't have. And then whatever you and your business partner or business partners don't have, you can hire those people. So just make sure that you're finding someone who will complement you so that way you are able to do different things. Even if it's somebody who is in a different network, right? So we all have networks, we all know different people. But if we are in the same network and we're business partner, we want to do so much. So you want a business partner who has a different network, who'll be able to talk to different people and get business for you, rather than you guys doing the same thing. So that is what I would go ahead and recommend in regards to choosing the right business partner. But for me, vision is everything. If you're not in alignment, please do not be in business with that person. All right. So another question we have here. The question is around generational wealth and inheritance. Wow. Thank you for this question, because this is a question, this is something that I have been really talking about, especially in this season of crisis, because I think a lot of people forgot the importance of family. A lot of people forgot the importance of relationships because we're so busy doing our own things, right? So a lot of people forgot the importance of that. Also, I think we've been socialized, especially the last couple of decades. And I'll talk this from an African perspective, right? So as Africans, we're used to families, we're used to communities, and then we've started seeing a change of whereby people are looking at it individually. And so when even families are people are growing up, people are father and mother have created this wealth, and then now it's time for them to pass the baton, if I may put it. So they've worked very hard, they have this estate, and it's supposed to go into the next generation. We start seeing problems in wealth transfer. And the reason we're seeing problems is, one, there are two sides to it. On one hand, we are seeing a younger generation that is feeling that, they expect it. I'm supposed to inherit from my parents. So they don't work hard. They're just waiting to inherit, which is a wrong attitude, right? But then we have others, and those are the ones that I keep saying is where family needs to be going for. For generational wealth to happen, it needs to have a smooth transfer. So parents have to then transfer the wealth to the second generation, who then transfers it to the third generation, and hopefully to the fourth generation. You will know you're wealthy when whatever you make, whatever is in your estate is enough to support for generations after you. That's when you know you're wealthy, right? So when back to what you're talking about, inheritance, I think what people need to be doing, and people need to be speaking in families, is to say, look, this is the wealth that the family has. And when we transfer, how are we going to go about it, right? And what you do not want to happen is you do not want siblings fighting over money, right? Because if people are fighting over money, then what happens is then everybody loses, right? Everybody loses. So what you need to be doing as a family at this time is really talking about, how do we structure this wealth so that everyone has a portion of that wealth, and how it's divided depends on the family, depends on the situation. Having those conversations so it's very clear going forward, this is how things will be inherited. Sometimes some parents choose to, because they know their children, so they each property, they're able to give different children separate properties so that no one fights. But if you're wealthy and you have a lot of property, sometimes it might make sense to keep the property together. So in this case, you need to be looking at structuring your property and saying, do I put this asset, for example, in a trust? Do I put this asset in a family company? So that way, each child, let's say, for example, you have 4 children, each child owns 25%, right? Because sometimes when you start subdividing the family assets, then it's not able to grow. And let me give you a clear example. For example, you have a great business, right? You know, like the Chandarias, the Shahs, the Patels, the Chris Kirubi. If you have a big business, right? So for example, you own a bank, and then now it's moving to the next generation, and then you start, you say you're gonna sell the business so that each child gets a chunk of the money, then you've lost it, right? So what you want to do in that case is you want to keep the business in the family name, and then make sure that your children are the shareholders of that business. And even if they don't want to work in that business, other people can be hired to manage that business, but then they will still hold ownership. So when you're talking about inheritance, you have to look at the particular asset you're talking about. You have to look at your children and their dynamics, understand how your children are. But where you want to be doing this as a parent is you want to bring in the family together and letting them know, if we do this as a family together, our assets, our estate together, we are better off than when we are apart or when we subdivide our assets. So that would be my recommendation. And I think from a very early age, you need to make sure that your children are building the wealth. We talked about having wealth for 4th generation. Your children should not be sitting back thinking like, oh, I'm going to inherit. No, whatever you give them, they need to build, right? So if you give your child 100 acres, they need to then be able to build that 100 acres of land to now 200 for their children, right? So as a parent, you need to actually be having a vision for the family and teaching your children that whatever you give them is not for them to use and deplete, but it's for them to actually have a base to grow. Because if you do not give an inheritance to your children, do you know what happens? First of all, they have to start from scratch. And when they start from scratch, they will never, it will be very hard for them to actually become wealthy. And then the cycle of poverty continues, right? So if you notice people who are not wealthy, or people who have situations of in a poverty situation, they stay in that poverty cycle, mostly because of poverty mindset, but also even when they have they don't have a poverty mindset, they're now thinking abundance, they are stuck because anytime they're trying to grow, the rest of their family is bringing them down, right? So you as a parent, when you're thinking about inheritance, you want to do it because you're going to help your child start from a good base so that they can then build. I hope I answered you well. And if you have any questions, you can contact us at Regal Africa. We're really big on wealth management, how to plan, how to structure, how to grow and manage your wealth. That's really important. And especially because of what's happening now, I'm sure that the best way to create and grow your wealth is through collectively as a family and not individual. All right. So I see we have a few minutes, but let me see if I have a few more questions here. I have, oh, wow. Someone from the diaspora. So someone is saying, how can I invest in the stock market if I live in the diaspora? How can I invest in the stock market? So I'm assuming this person is probably Kenyan, living outside Kenya. Or maybe just any African or someone living outside their country. So if you're looking to invest in the stock market, for example, the Nairobi Securities Exchange, you need to actually work either with an investment bank or you want to work with stockbroker. And these ones are licensed. They are licensed by the Capital Markets Authority, and they are able to then enable you to then invest in the stock market. Now, there's the old school way of doing things where you had to open up a CDS account or different things, and everything was manually. But there are very many different stockbrokers whereby you can actually do it digitally, right? So people are now using technology. So even though you're outside the country, as long as you have the right information, the right documents, what we call KYC, each of these financial institutions need to know their customers. So they'll need to have your ID, your PIN, just different things, your picture. They need to have this information to open up the account for you. Once you open up the account, then you'll be able to start now trading in the Nairobi Securities Exchange. What I would advise though is you want to work with a financial advisor. What happens is with these investment banks or stock brokerage firms, they do a lot of research. This is what they do every day. They know these different public listed companies. They meet their managers. They do projections. They have a fairly good understanding of what could potentially happen. Now, of course, nobody knows what will always happen, like now what happened with COVID, but they have better insight than you would if you do not look at the market all the time. So what I would say is that you would then need to find a financial advisor who is linked with these investment banks or stock brokerage firms, and they can then open up the account for you online, and you can trade yourself, or you can actually speak to the financial advisor before you do this trade so that they can advise you accordingly. But it's possible to invest in the stock market or in any different asset classes. Anyone in the diaspora, you can be able to invest in anything in Kenya, either do intermediaries, like I mentioned, or you can come, back home and do it yourself. But the key here is always finding the right professional, doing due diligence on the assets that you're investing. And I always encourage people to actually work with a wealth advisor like us at Ripple Africa, so that we can actually tell you the details and do the research about the returns, the track record, management, just those things which are very important for you to make an informed decision when you're investing. All right. So it looks like those are the questions that we had today. I see another question, and we have a few minutes here. I see a question from Rachel. Where is the balance between accumulating wealth and social contribution in the society? What is the balance between accumulating wealth and social contribution in the society? That's a good question because it speaks to my life a little bit, because all of us want to be wealthy. I believe you have to be responsible enough to actually make money that you can be able to support yourself, your family. So creating wealth is very important. But at the same time, social contribution to your society is very important also. So you have to do two things. When I talk to my clients, I always talk about you when with everything that you make and all the money and all the wealth you accumulate, you need to leave a legacy of funds, which is money, and a legacy of purpose, which is impact, right? So when you're looking at accumulating wealth, you have to look at that balance and say, you know what? If I don't have money, I cannot make an impact. I always say you cannot pour from an empty cup, right? So if you don't have the money, you cannot support the cause. Like for me, I'm very passionate about women in business, Africa economic development, supporting families. I cannot do that if I'm not accumulating wealth, right? So wealth accumulation is important. It's the first thing that you need. You need the money for you to be able to do what you need to do, because money is an enabler. And so that's why I keep telling people, you need to change your mindset about money. There's nothing wrong with going out there, getting a good job, making money, starting a business, making a lot of money. There's nothing wrong with that, because when you have that money, you'll be able to support as many people as you can. If you look at what's happening in the crisis right now, if you're looking at internationally, the people like, Facebook, Apple, Visa, all these corporates, they make so much money so they can actually give back to community at this time. So what I would say, Rachel, is you first have to focus, in my opinion, focus on wealth accumulation so that you have enough for you, your family, and enough to then be able to give other people in the society, because you can't give from what you you don't have. And that's why you see a lot of guys who do philanthropy are already wealthy. They either made the money themselves or they inherited it. And if they inherited it, there was already a family culture of giving back to the community, but they cannot give what they don't have. So start with wealth accumulation and then use that money that you make to do good in the community. All right. So I think that that was the last question for today. I think it was an interesting discussion about very many different things, from society good to inheritance to business. There are very many things that need to be discussed in regards to wealth. And I am very excited that you joined in, be it on Zoom, on Facebook Live, to just hear me out. Like I said, the reason I started Wealth Conversation with Gaitha is just to answer questions that I get every day from people wondering what to do next. And I do this because I've had experience in banking, investment banking, private banking, wealth management. I have supported very many different, wealth individuals, businesses, institutions. And from that, I think I've acquired some information that I think the world or people need to know so that they can make the right decision. So just go ahead and tune in every Wednesday at 6 p.m. East African time, 8 a.m. Pacific Standard Time if you're in the US, and I will be very glad to answer your questions. If you have any questions before that though, and you really need to get a hold of me, you can message me on our Facebook page, which is Gaitha. Or you can actually email us at wealth@regalafrica.co.ke, and then I'll be able to see how best to assist you or how to best connect you with the different people that we work with. So in this time of crisis, just remember what you need to be doing right now is, one, if you don't have savings, put aside 3 to 6 months of your savings. Once you have that, you need to start investing. There are very many different asset classes, right? There are conservative investments. There are investments that can make you a whole lot of money. There are traditional assets. There are alternative assets. Maybe the next time I'll go into details about what all these different things you can invest in. There's a lot of information out there that I can support you with. So go ahead and ask those questions, and I look forward to speaking to you next time. Ask me the questions and I'll be glad to answer you. And just remember, it is in time of crisis that opportunities are found. So if you're looking to get into business, like Joe was asking, if you're looking, you have extra cash, you're like, where do I put it? There are opportunities, and the opportunities that are going to come. So just speak to a wealth advisor and they'll be able to assist you accordingly. So thank you for joining me, and God bless you. Bye-bye.